all, and welcome back. I hope everyone is doing incredibly well. Lots of different stuff to cover today, again, as some major news has hit the headlines across the crypto market and potentially could be one of the shining lights or the saving graces to drag us out the depths of this bear market. And as well, I wanted to look at more detail as what is happening in the Hedera ecosystem itself, and potentially as well some interesting models which look at the price based on those key metrics across Hedera. BlackRock CEO Larry Fink calls Bitcoin an index of money laundering. So that's how it started versus how it's going. BlackRock files for spot Bitcoin ETF with Coinbase as a crypto custodian. And that was on the 15th of July, just over 4 days ago. And of course, that original one being back in 2017. And this has been a prominent feature that I've spoken about an awful lot over the past year in many different videos. Not only the changing mindsets, we can see that here of the BlackRock CEO, Larry Fink, the changing mindset over the last 6 years, near enough, going from index of money laundering to actually wanting now to open this up to institutional investors, to the equity markets per se, and also the spot ETFs and why they are so important. And we'll cover that in just a second. But it truly is one of the beginning things you require in order to unlock massive amounts of equity and volume throughout the crypto markets. So we can see BlackRock may have found its way to get an SEC approval for a Bitcoin spot ETF. The asset management giant including a surveillance sharing agreement in its proposal, which would eliminate the risk of market manipulation related to Bitcoin. So BlackRock's BLK iShares Bitcoin Trust application to the US Securities and Exchange Commission this week might stand a better chance than previous attempts by other fund managers, thanks to the promise of its surveillance sharing agreement between exchanges. On page 36 of the Nasdaq, where the proposed ETF will be listed, of course, the largest exchange globally, the 19B4 filing stated that to mitigate against market manipulation, the Nasdaq will be brought in to enter into a surveillance sharing agreement with the operator of a spot trading platform for Bitcoin. Surveillance sharing agreements allow for the sharing of information about market trading activity, clearing activity, as well as customer identification, allowing for little possibility of market manipulation. So of course, this is incredibly bullish that this application is going forward, and talking about why this is incredibly important and could be a pivotal moment for the cryptocurrency markets in general, because of course, as we all know, equity or money tends to flow, or capital, it tends to flow into Bitcoin first and then obviously trickles down throughout the remainder of those altcoins. Not only that, this gives exposure to those institutional investors where trillions of dollars are available to enter into the cryptocurrency markets. A rising tide raises all ships, and of course, none better than those top tier altcoins. Shown below is when the GLD ETF launched, which of course allows easy access to gold exposure for those particular investors. If and when BlackRock, who has a 99% ETF approval, launches with a very similar structure to GLD, expect similar price action as it unlocks access to Bitcoin exposure for the masses. And that's literally what I just spoke about. So we can see here, what's that, late 2005, early 2000, like really late 2005, we can see that GLD ETF, which allows those investors to effectively passively purchase gold intangibly. We can see the amount of capital that then was able to enter the gold market for CFDs in general. And of course, we have seen the price of gold continue to appreciate from 2006 onwards. And part of that could be attributed to when that particular ETF went live, and something very similar, if not even more aggressive, could take place for Bitcoin, because of course, onboarding is one of the key aspects that is required in order for massive amounts of appreciation in value to take place. Of course, as well, not to be understated, that 99% win rate is a 575 ETFs successfully launched to 1. So effectively, BlackRock has an incredible odds here and know their stuff really well when it comes to filing ETF applications. And they must have a severe amount of backing within the company internally to know that submitting this ETF for Bitcoin is likely to be approved by the SEC. And we could see this hit the markets very, very shortly. Incredibly bullish stuff in general, and something to be very, very excited about as it begins to take form. Some more interesting information as well about Binance. The judges have just signed off on Binance SEC deal to move all the US customer funds, wallet keys back onshore in lieu of a restraining order. So the proposed agreement addresses the SEC's motion for a temporary restraining order, and that of course is for Binance US. As I've said in the past, when it comes to a lot of these centralized exchanges, make sure you've got a very small amount, if any, funds on a centralized exchange, and make sure you have got a non-custodial wallet that you're keeping your cryptocurrency assets within. Of course, for the Hedera ecosystem and for Hbar, for me personally, it's Hashpack. Of course, there are other alternatives like Blade Wallet. There's various different channel tutorials on my channel about moving funds to and from centralized exchanges to wallets. And of course, I'm sure there are others as well on the internet. Right then, what was I talking about at the beginning of the video when we were looking at the Hbar network model? Interesting tweet here by Alfie Quant. And the Hedera network value has seen a significant increase in network activity recently, and we'll dive into that in just a second. But by this particular model, the Hedera network value, or NV, is 49 cents, and our price deflection from NV, i.e. the current price as a percentage, expressed as a percentage of that network value price, is just 9%. So effectively, we're only at 9% of the current estimated network value based on some key different metrics such as total active accounts, etc. So what we can see based on that is currently middle of 2023, we've got a network value effectively of 50 cents, and we're of course at 0.045 cents. So a massive discount currently of what, 90 something percent of where the current value should lie based on those on-chain metrics. Gets more interesting as well as you begin to extrapolate further out into the future based on growth rates, because of course Hedera has been growing really rapidly. When we look at the total number of active users, total value locked, total addressable value, total value represented, there's tons of different metrics, and Hedera is absolutely smashing it across all of those different levels as they continue to build and expand. Things like transactions as well are not to be mistaken or under sort of nationalized. When we look at it realistically, Hedera is the number one used DLT blockchain, whatever you want to call it. Of course, it's a DAG, DLT network, sorry. But it is the most used blockchain when it comes to not only retail, but enterprise use. Of course, the vast majority of transactions that are being processed across chains, a huge proportion of those are being done on top of Hedera. We look out into the future by some of these growth metrics, and we look at the potential network value should be around 70 cents by, say, the end of 2023. That goes to $1.01 by 2024, up to nearly $1.50 in 2025, 2026, $2.10, 2027, $3.03, and then all the way out to 2028, we're looking at nearly $4.40 per Hbar token, which of course is almost unfathomable from the current prices that we're at. But if Hedera continues along that trajectory of growth from what we're seeing based on those metrics, then there is some really serious price appreciation here that could take place for Hedera, and it will be literally the flip of a switch when this begins to occur and we see more and more investment flow into Hedera. So of course, it's making sure that you've got those positions built early and being patient and knowing what you hold. And that's what this channel is all about. All my different videos covering the various different advantages of Hedera, and of course, not looking at it through rose-tinted glasses and comparing it fairly to other DLT and layer 1 or layer 0 networks. We begin to really clearly see that Hedera is leaps and bounds ahead of the masses when it comes to the technology and capability that it offers to those institutional investors. And of course, the data sources here come from Messari. We can see that as well as we're smashing new records on the Hedera mainnet. We've been hitting nearly 1500 TPS for the last 5 or 6 hours concurrently. We're sat at 11 billion transactions and quickly approaching the 12 billion transaction mark. As I said, most used DLT that exists to date. Interesting report here from Messari Crypto as well, which provide lots of different on-chain statistics and also do report packs on a regular basis. Ethereum generated the highest revenue in Q1, of course, driven by its high usage and gas fees. The revenue was $457 million, almost 3 times the combined revenue of all other featured layer 1s. And that's partially or majority down to those transaction fees. Hedera had the most significant revenue growth though, up 489% quarter over quarter, driven by its consensus service. And that is down to the sheer volume of transactions that are being processed. And that obviously is being reflected in those transaction figures we just looked at. And we can see again here, largely driven by the increase of usage, which enables the verifiable timestamping and ordering of events for Web2 and Web3 applications. These applications include tracking supply chain provenance, counting votes in a DAO, and monitoring Internet of Things devices. So lots of different information in here about other cryptos as well. I'll leave this link down in the description if I remember, so you guys can take a quick look. But some seriously interesting information about the various different chains and what's currently happening, as well as ecosystems and just different technicals for the key layer ones across the ecosystem. And this is something that's well worth keeping an eye on. We can see here as well developers increasing massively when it comes to Hedera's chain, as opposed to some of the other layer ones that currently exist. Lots of different key metrics there that Hedera is topping the charts on when it comes to that particular information. Rounding up this video then, is it's a slightly shorter one than normal. Some interesting tweets here from the Hbar Foundation asking, how can Hedera bring greater efficiency to the public healthcare system? Thank you Coinbase for highlighting the work of Asa and Dr. BCMMD12 of the UAB Pathology Unit. And of course, Hedera effectively getting a shout out by Coinbase, saying that blockchain technology can speed up the compiling and sharing of different types of health data. And of course, that is one of the Hedera governing council members there with a potential use case that they'll be building on top of Hedera. There are tons of these different use cases. And again, there are many different videos on my channel covering those particular use cases. As always, hopefully you guys enjoyed this video. If you did, leave a like, drop a comment if you've got something to say. I do try and respond to as many of them as I possibly can. And you can always subscribe to be notified of the next video. Until then, guys, I'll catch you. Cheers.